Welcome back to the Liquid Math channel, where we use AI-powered market analytics for crypto investors and to those who wish to learn about crypto market analytics.
DeepSnitch AI promises to decode blockchain behavior that humans can't see, scanning wallets, flows, and on-chain movements before they go mainstream.
But what does its price action actually tell us? In the next few minutes, we'll reveal 3 hidden angles most traders miss, why sentiment and structure are diverging, and what the market is truly pricing in for DeepSnitch AI. DeepSnitch AI is a Solana-based analytics project, an AI platform that scans on-chain patterns, wallet behavior, social signals, and flow data to give early visibility into market behavior. Its core pitch is behavioral intelligence, not price prediction, and it is currently in pre-sale or early market formation.
Price action and structure, what you see.
As of December 17, 2025, DeepSnitch AI trades around $0.00001281 on Solana pools. The chart shows an initial vertical launch wick up toward around $0.000015 to $0.000016, followed by an immediate drop, and then a rebuild into a higher base near the current level. This pattern looks like a classic launch impulse followed by stabilization, not a straight dump to zero. Now let us look at DeepSnitch from a few less obvious angles.
Angle number 1, launch wick became overhead supply.
Most traders see the big spike and call rug or pump.
The non-obvious insight, that first spike has turned into resistance, not a failed breakout.
Price has returned to that zone multiple times and not collapsed further, showing accumulation interest around this range. People often miss this because they focus only on the wick's peak, not how price behaves after the wick.
Angle number 2, price rise on lower volume.
Later rallies toward this base happened on much lighter volume than the initial launch. In most markets, weaker volume behind higher prices suggests fragile conviction, but here it also means liquidity is thin and moves can be exaggerated, up or down. Many viewers assume price up equals demand, but in microcap emergence like DeepSnitch, price can rise without strong demand simply because there are few sellers left.
Angle number 3, sentiment is mixed, not unanimous.
Reddit sentiment is curious and exploratory. Folks talk about AI analytics, whale tracking, and behavioral signals. YouTube comments are bullish with comments mentioning Moon but also confused when mentioning wallet not showing and stage 1 is over.
That tells us the narrative is being discovered, not confirmed.
This mismatch between hopeful sentiment and inexperienced participation often precedes sharp swings. The story attracts attention before structure validates.
Now let's look at online narrative versus reality. Online narrative is that DeepSnitch will revolutionize analysis with AI, catching signals humans miss. But reality is that the market is testing structural strength around the launch base with thin liquidity and uneven participation. This gap means positioning should be level-aware, not narrative-driven.
And now let's continue with the Liquid Math Market Pulse Index, LMMPI. The Liquid Math Market Pulse Index, LMMPI, is something that I created with the help of AI, and what it does is that it scores the coin from 0 to 100 based on price structure, sentiment, macro pressure, and hidden signals. 0 to 20 is extreme risk, which means panic conditions and a high crash probability. 21 to 40 is defensive zone, means that fear dominates, and there are only high-risk setups. 41 to 60 is neutral zone, which means that the market is undecided and choppy with mixed signals. 61 to 80 is constructive zone, which means that data favors continuation. This area holds the best risk-reward ratio. 81 to 100 is overheated zone and means strong trend but growing blow-off risk. DeepSnitch's LMMPI score as of today is 52 out of 100, which indicates story interest and unique value proposition, structural recovery after launch wick, thin liquidity and low sustained volume, and sentiment still speculative and UX friction evident. This places DeepSnitch in a neutral, opportunity-rich, stability-uncertain regime. Let's proceed with the risk map and if-then framework. Base case is that DeepSnitch remains range-bound near current levels, building structural context around $0.000011 to $0.000014. Upside path is if price reclaims and holds above around 0.000014 with steady volume support. The market may test the prior high wick zone near 0.000015 to 0.000016. Failure mode is if DeepSnitch loses around $0.000011 on rising volume. Deeper resets toward lower support bands become more likely. DeepSnitch AI's price action is not random hype, it's a liquidity story in the making.
The narrative is compelling, but structure and volume must confirm before strength becomes reality.
As of December 17, 2025, the most likely outcome for DeepSnitch AI over the next 30 to 60 days is continued base building between $0.000011 and $0.000014, as early speculative interest cools and the market waits for confirmation through volume expansion or product progress. A decisive break above 0.000014 with sustained volume would signal a transition from discovery to momentum, while a loss of 0.000011 would indicate that the market is not yet ready to support the narrative at current levels. For now, DeepSnitch remains in a high potential, high uncertainty phase, where structure, not hype, will determine the next meaningful move.
This has been the Liquid Math.
If you found value in this hidden signal breakdown, subscribe for more LMMPI updates and AI-driven crypto analysis that cuts through the noise.